So we're very honoured to have two people who are at the forefront of leading us through this currently. We've got Kevin Gallagher here, who's CEO of Santos. Or is it Gallagher, isn't it?
Oh, you got it right first time,
right.
Shemara. You're
okay.
one of the few people who pronounced it correctly.
Ed was telling me to do the go, right? So he is CEO of Santos, oil and gas company, and we've got Frank Calabria here, CEO of Origin, one of our largest generators and retailers in energy, and both of them are using their resource and expertise across their businesses to drive this transition. So something we at Macquarie have in common with them. But I might, if you don't mind, start with you, Frank. And Ed was saying quite a focus on 2030. I was interested in understanding you as an energy company in both generation and retail, what you're doing for 2030, but also how you position Origin, it's been colourful times, for the decades beyond that as well.
Yeah, no, thanks very much, and pleasure to be here, everyone. So 2030 is, as Cobat said, a tall challenge to hit the emissions reduction, and probably there's huge opportunities, and probably I would just frame it overall that everyone is getting very fixed on 2030 and for many investment horizons, and everyone focused on it just the next 5 years. But we should always remember the fact that if that's 32 gigawatts of renewables that needs to come in the system in addition to everything else, and that gets to 2030, then we're going to do it again in 2040, and we're going to do it again in 2050. So when we think about the transition, we really do think about it over those 2 decades, and very much respect the fact that we want to be thinking about it to 2030. But heading into 2030, if you ask me then what's the key things that are going to drive whether we achieve that target in the spirit of today, I mean, it really does come down to transmission right now if you're looking for large-scale renewables to be built. I think rooftop solar will go, and transmission has got a lot of those hurdles at every point of it, and probably many people in the room know this. But if you have a look at the original timeframes, the reality is that, we may get a Hume link. There's still the ring around of Sydney that's got to be built at 500 kV, where PEC is the other one, the Energy Connector of South Australia, is not on track for time. We've got the Central West. So, quite frankly, everyone is really focused now, and that's before you think of the social licence in some of those. But I think we can get caught up in that negative spiral, but I would really back into the spirit of what Ed said about positivity. There's a lot going on. There's a lot that will be built. It will need to be tripled. See enormous investment opportunities and lots of things playing out in the distributed energy space, but also we're investing clearly in large-scale storage, renewables, and also really virtual power plants and a bunch of other technology. But we feel that they're probably the key things between now and 2030.
I was going to ask you a little bit about virtual power plants later, but I wanted to turn then to Kevin as an oil and gas company, how you are, because you have a critical role to play as well as we go through this transition. You talked about investment in storage, but the firming side of it is a big issue for us, and it's also a big industry for Australia. How are you leading Santos through that, and particularly going to lower carbon solutions as well?
Well, look, first of all, thank you for the opportunity. There's not many green conferences I get invited to as an oil and gas CEO. So when I look at the energy transition, I don't think of 4 or 5 year periods. I mean, our investments tend to be 20-year investment periods. We develop an LNG project or a gas project. These are long cycle CapEx investments, and so we can't work to a 5-year target or a 3-year target. We've got to think about where the trends are going long term. The difficulty with the transition and the instability that's introduced into our environment over the last 5 or 6 years has really slowed down the ability to reinvest. And so I think we're seeing some of the pains coming across the market right now because of that separation in supply and demand. But every forecast I look at shows that by 2050, gas demand is still very strong. And so our approach to that is, if it's going to happen, then it's incumbent upon us to start focusing on decarbonising that.
Yeah.
And so what we've chosen in the short to medium term is, we know that from an energy security point of view and a demand point of view, gas is going to be in strong demand in Asia, so let's focus on decarbonising that value chain. And so we've really put a lot of money and a lot of effort into developing carbon capture and storage technology. And only last month we brought on our first project at Moomba, the Moomba Phase 1 carbon capture and storage project, which to date has already stored 150,000 tonnes of CO2, and that will store up to about 1.7 million tonnes per annum. reducing Santos's carbon intensity overnight by 25%.
That's fantastic. And I know there are many other things you're doing, which I'll come back to in a sec. But coming back to you, Frank, and Kevin was talking about the environment for investing. It's a very uncertain environment in which to put money to work in this transition. But we're dealing with both the distributed, more intermittent energy and then also the behind the meter generation that's happening in your retail business. What are some of the strategic investments that you're making responding to this new world, and how are you getting comfortable on them?
So where we've put capital to work in a meaningful way has firstly been grid scale storage. We've invested in well over 1.5 gigawatts of grid scale storage, and that's moved from 2 to 4 hours now. And for that really is not just energy arbitrage, it's having capacity value, it's all of those, and it also enables us to optimise the way we run the rest of our fleet. Why would you start a gas-fired plant if you can turn this on for the first half hour and not start it? So gas-fired, firstly storage. The other thing about storage is that asset is recovered, that asset is returned really over a 10 to 15 year horizon. And it's the 10 plus year horizon that is most challenging, leave aside the policy, which we think is going to cause some issues. Because when coal comes out, the thing that we feel is then scalable in this market is you've seen the cost of hydro. We're not blessed with any other dispatchable generation other than gas-fired. And one of the key things we think people underestimate is, and now the market operator says, is it'll need 15 gigawatts of gas-fired generation to be available. It may not run very often.
Well, yeah, and that was a question I had for Kevin on the economics of having these peaks.
And so we feel the front end looks okay. It's that back end and the front end variability. So look, grid scale storage, we have a lot of gas-fired peaking, and we've invested quite a bit into the customer, because as you move away from fuel-based generation into renewables, where governments are likely to want to overbuild renewables, there'll be a lot of energy, but it won't be produced at the time that everyone's going to demand it. And therefore your ability to move that around and to match demand in real time becomes increasingly valuable.
And good on you for being so proactive, because listening to you talking, having moved from coal-fired generation to a retail system as it was, it's a huge change, isn't it, in terms of how the world's playing out.
And we're now at the stage which, if you looked at the fragility of the system, the stakes are getting higher by the day. Last week, we didn't even have summer temperatures, but you've got outages at Moomba, you've got outages on the Otway gas plant, you've got 2 units out in Bayswater, you've got something else. I mean, we are running now much, much tighter every day, and I think we've just got to get some of this secure capacity in, and that's what why I'm out publicly imploring the governments to actually just now focus on it, because the stakes are getting high.
Yeah, definitely. And even the AEMO forecasts say that we have meaningful risk of blackout coming with our system. Despite that, we are still trying to drive solutions. So I know, as well as what you were discussing, you were doing in carbon capture and storage, you're looking at direct air capture, e-methane solutions. So do you want to talk about some of those low carbon technology? All three of us, I think, have pulled out of hydrogen projects here in Australia in the last while, but
well, e-methane is what our Japanese colleagues call it, but it's really just synthetic gas, and it is a hydrogen project.
You're mixing, blending hydrogen.
And so it's hydrogen and using CO2 as a feedstock to combine with the hydrogen to turn it into methane, to get over one of the high-cost technical challenges of hydrogen, which is transportation. And I think I became very popular in 2020 for saying hydrogen will not work ever as an export fuel, and as I say, that made me very popular here in Australia at the time. But the reality is nobody can afford to change the trillions of dollars of infrastructure required to liquefy and transport hydrogen economically. We've been doing it with LNG now for the last 30 or 40 years, but it took a long time to get over those economic hurdles. And to change all that infrastructure out, it's just not feasible. And particularly when you consider hydrogen is 1/3 the energy density of methane, therefore 3 times the infrastructure on the other side of that transportation for the same energy content. That ain't going to happen. So our approach to doing that is to take hydrogen, combine it with CO2, and because that CO2 is being collected from our customers and transported to wherever we're making the hydrogen, when they burn it, they may release it, they may capture it, but ultimately they can never release more CO2 into the atmosphere than we're putting in into the fuel, and hence it's a net zero fuel on a life cycle basis. And so that's the only way we see that we can use hydrogen economically in time. It's not economic today, but we can make hydrogen quite low cost in certain locations. And so Moomba is very good for renewable sources, for example. It's probably Australia's best solar location from a solar penetration perspective. It's one of the, I think it's about the second best wind location in all of Australia, and a lot of that tends to be in the evening hours. So that's a very good mix. And then by building on top of our CCS project and expanding that to be third-party CCS, where we're bringing in carbon from our customers or other industrial emitters to our Cooper Basin, we can then have a commercial business that makes money out of storing other people's carbon. And of course, we can then use that as a feedstock, as input to our e-methane projects in the future. So we can see this sort of 20-year build of progressive businesses, and when our natural gas resources start running out, albeit abated natural gas, we can start to replace that with synthetic gas volumes. And because we're connected to two existing LNG facilities, we can start to use that as feedstock for those and effectively have net zero LNG 20 years from now. So that's the vision. We believe there'll be a strong requirement for liquid fuels and gas fuels in the future. That's not going to go away. And if you think of all the side benefits and products that we get from gas, you can do that from synthetic gas. You lose nothing. You lose nothing that you get from gas today.
Look, it's so encouraging what you're both doing in quite an uncertain investing environment. But I guess I wanted to ask the question of both of you. May start with you, Frank, and you have expressed some frustration about them and the glide path we're taking here in Australia. In terms of policy, what can we be doing? It's policy, technology issues, geopolitical issues. How can we, if you had a choice of three big things you could do to try and help us?
I've been vocal over the last couple of weeks, but mainly around the reform of the national electricity market. And the reason being is at the moment, the government's implemented a capacity investment scheme, and they're doing that to stimulate investment between now and 2030. And that's a contract structure that's really outside the market mechanism, and it's yet to be proven as to how that will work with the liquidity of the market. And I'm thinking about large customers and contracting, but that's something that's actually playing out right now. But we've had like 3 goes at reform of the market, and way back to Finkel, and even in 2025 we had Kerry Schott and others develop. And really we're an outlier today of having an energy-only market. And the reason was it was established at a time when we're probably we're a third of the size and capacity. It was based on stationary energy. And we are going to need some technologies that are sitting in reserve and switched on infrequently. So there needs to be a capacity mechanism incorporated into it. You can see today that capacity mechanism federally doesn't utter the word gas. And we keep saying, well, people are going to build renewables. Yes, we need to execute. We're going to build storage. We're going to find distributed energy. The march of those technologies are coming on, but we can't see a scalable, dispatchable energy.
Yeah.
And most countries in the world would not allow. If you want coal shut, it's only coal or gas, and coal doesn't work alongside variable energy. And we can just know how expensive it is to build hydro in this country. So what we're encouraging is that they do that, because we think that will be a limiting factor for the ability to go at pace. The second is that the whole planning cycle for development of any infrastructure, but if you even look at it today, probably someone in the room knows more than me, but you've got transmission companies that were set up to operate, not build. Now they're building alongside new Energy Co, alongside new AEMO services, alongside, and that's tricky. And and the rural community feel that they're wearing the burden for the rest of society for that to be built at the moment. So the encouragement of that infrastructure has actually got to be, if you want renewable, large-scale renewables, and that's clear they are the 2 technologies I agree with Ed. The third really is that if we go into a debate now that stops the other government going in, so I'm here to tell you, if we're reforming this market, we're on critical path already by 2030. And when we think about that over time, the one thing I would be asking now is that it has got beyond a safe harbour for us to not make long-dated decisions now policy-wise, because I do worry about losing the consumer and customers along the journey if we don't get that right. They would be the 3 things.
And I don't think the consumers and customer realise, as you were saying earlier, the implications for them in cost of energy that's
Cost of
coming,
energy.
but also in terms of reliability of energy. And
That's
you know,
exactly
once
right.
it starts swinging, then you start losing the mandate for this transition, but it's too late because we
That's
haven't
exactly right.
created
Yeah.
the backups, which is a challenge. But Kevin, what are your thoughts on the challenges and any thoughts on solutions that we...
Well, Shemara, I think that the biggest risk to the energy transition in Australia is cost of living and the impact that that will have on people's quality of life. And I think if we don't manage the transition in a very orderly fashion, we're going to impact people's quality of life to the point where that will slow it down dramatically. And so for me, I always get astonished when I look at how politicians will pick a technology like they know what the right technology, the best
Are you talking about
technology is.
nuclear or... No.
I'm talking about all sides of politics here. And for me, the best policies would be technology agnostic and set the framework, set the goals, set the regulatory frameworks to support that, and let the markets decide. Let the markets drive the innovations and the technologies to get there faster. And I think that that's what we will see in other parts of the world in the not too distant future, leaving us behind if we're not careful. And really, you know, I've been on record many times. It's just not asking the politicians to let the market decide. You know, because whether it's things like carbon capture and storage, direct air capture, renewables. I mean, we use a lot of renewables in and around our facilities behind the meter. Let us decide. Just give us the targets, hold us to account to deliver on those targets, and engage our sector. You know, I find it astonishing that the oil and gas sector is banished from the conversation with certain governments. I mean, who is it you want to transition? And who would you like to transition faster? You know, if I build a renewables project, I'm excluded from many of the incentives and the opportunities to get government support just because of the type of company that we are.
Yeah.
To me, that's nonsensical.
Well, well done to both of you for proactively getting on with, you know, as you can hear, a lot of solutions in the very uncertain environment we have, but also working to try and help get an orderly glide path for this country, plus solutions for our region in terms of export. To me, it feels like it uplifts the uncertainty globally. We're talking about our local environment being challenging. So, so we need you guys to be persevering with solutions that you're investing in. But so I'd just like to, because we're out of time, finish by thanking both of you for joining on the panel, for sharing your thoughts, but also all the work you're leading.
Thanks, Shemara. Thanks.